Welcome back to How to Crypto, where we turn red candles into buying opportunities and moonshots into actual math. Today, we're doing a full alpha drop on the one stock that's half car company, half AI monster, and 100% the most hated, loved ticker on the planet, Tesla. We're breaking down why TSLA is still the king of stacked S-curves, how Robotaxi plus Optimus could 20 times the company from here, the exact CAGR numbers that matter, and whether this dip is the last real chance to load up before the next leg rips. No fluff, no hopium copium, just cold, hard edges and levels. LFG. First, what is an S-curve? Technologies don't grow in straight lines. They start slow, high costs, early adopters, tons of problems. Then production scales, prices collapse, and adoption explodes in a hockey stick move. Finally, it plateaus. That's the S. Tesla doesn't ride one S-curve. They stack them like a Jenga tower of innovation. Start with batteries. In 2010, lithium-ion cells cost over $1,000 per kilowatt hour. By late 2025, we're under $100. That's the classic S-curve, decade of R&D pain, then explosive cost drop as gigafactories pumped out millions of cells. Result, energy storage revenue up 44% year-over-year in Q3 2025 to $3.42 billion, with record 12.5 gigawatt-hours deployed, megapacks flying off the line, and the cheapest, longest-lasting power source for everything Tesla builds next. Next, electric vehicles. Global EV adoption is right in the steep part of its own S-curve. Tesla delivered a record 497,000 cars in Q3 alone, even after tax credits vanished in some markets. Cumulative deliveries are past 7 million, and every one of those cars is a rolling data collector for autonomy. Then the chips. While the rest of the world fights over NVIDIA GPUs, Tesla quietly built AI5, the most efficient inference chip on the planet for full self-driving. Billions of real-world miles are training the neural nets every single day. This isn't just hardware, it's the brain that makes everything else possible. Now the fireworks, Robotaxi and Optimus. Robotaxi launches scaled in 2025, starting geo-fenced in Austin, expanding fast in 2026 with the steering wheel-less Cybercab. ARK Invest says Robotaxi alone could be 90% of Tesla's value by 2029. A $10 trillion ride-hailing market, 70+% margins, cars that earn money 24/7 while you sleep. And Optimus? Elon says long-term this humanoid robot will be bigger than everything else combined. 2025, thousands in Tesla factories. 2026, tens of thousands. Eventually, millions doing the boring, dangerous, repetitive jobs humans hate. Target price under $20,000 per bot when scaled. Fundamentals right now? Q3 2025 revenue hit a record $28.1 billion, up 12% year-over-year. Energy up 44%. Automotive margins rebounding to 15.4% excluding credits, $41.6 billion in cash on the balance sheet. Full year 2025 expected around $112 billion revenue. Stock check. Trading near $391 today. From a split-adjusted $17 in 2015, that's roughly 37% compound annual growth over 10 years. Revenue CAGR from 2015 to projected 2025, over 40%. Base case many analysts run, 25%. CAGR to 2030, taking revenue close to $300 billion. Bull case with Optimus and Robotaxi scaling, 40% plus CAGR and valuations that make today look cheap. Risks exist. Competition from BYD, regulatory delays, macro noise, but Tesla's flywheel of data, scale, and AI is unmatched. If you're wheeling TSLA calls or stacking shares on dips, this is your edge. Drop your TSLA position size in the comments, smash like if you're loading up, and subscribe for the next alpha drop. Peace.